There are many friends in the audience, and I think many of you here I know well, and I know that you care deeply about this industry, as do I. So I hope that the remarks I give you in this opening address will provide an interesting backdrop to the discussions that we're going to have during the course of the day. Now, like many of us, I have been deeply troubled by the impact of the global financial crisis. We've witnessed damaging effects through the collapse of the Western financial model that has inflicted deep harm on the world. Global financial behemoths have collapsed, and the impact has rippled out with ever-increasing ferocity, culminating in a financial crisis that is now paralysing many European states. Back in 2007 and early 2008, there were several voices in the Islamic financial community who, somewhat bravely I thought at the time, suggested that Islamic finance had weathered the crisis well, and its ethical proposition, its close connection to real assets, and its general superiority to the much maligned riba-based conventional system would allow Islamic finance to map out a better path for the future of global finance. But within months of the Lehman collapse in September 2008, problems in the Islamic banking community also started to rear their heads. Now, I've not checked the chronology of the events, but I think you are all very familiar with some of the names: Dubai World, the Investment Dar, Gulf Finance House, and perhaps most recently R Capita. Sadly, we're familiar with these names, but for all the wrong reasons. Watching the impact of the GFC on the Islamic financial market, and doing so as a transactional lawyer at that time, I was acutely aware of several reasons why Islamic firms might not remain immune. Now, the first, in my view, was timing and luck, rather than skill and judgment. And it was those factors that helped many Islamic financial institutions avoid some of the worst excesses of the GFC. And the point I'm making is that many of the firms that we now know were not actually established until the new millennia. And that meant that they were not actively acquiring interests in toxic assets at the height of their proliferation and creation. But I would say that you need to be aware investment products were being designed that gave returns indirectly linked to those sorts of asset classes. That is a practice that fortunately has now been curbed. Second, as private equity valuations and real estate prices started to tumble, I knew that there were many Islamic firms that were overexposed to real estate, overexposed to private equity, and particularly private equity and real estate. And then the third factor is that governance and risk management standards within many of these IFIs were not best in class. So post-Lehman's in 2008, I knew that there was more pain to come, even for our industry. As the consequences started to impact IFIs, I increasingly found myself thinking about the potential harm this might cause our industry in the longer term, and perhaps more importantly, what steps could we start to take to mitigate its impact and ensure against a repetition of the problems in the future. During the years prior to the GFC, I had advised quite regularly on Sharia governance and reputational risk issues, both for fully fledged IFIs, but also for quite a few of the conventional banks running windows. And over that period of time, I drafted quite a few Sharia supervisory board agreements and the related scholar appointments. And in many respects, doing that as an advisor, the view was pretty much, well, once you've drafted the documentation, once you've got a process in place for the SSBs to meet and sit down, then the job was done. But even as I reached that conclusion and took my fee for the work, I realised that there were a bunch of other concerns at state level. Whether or not there should be a central SSB, for example. If you have a central SSB, should it operate under the umbrella of the financial regulatory authority in the country concerned, or should it be independent? All these sorts of issues that I thought were for regulators and policymakers, not for transactional lawyers. But as the GFC continued to evolve, my personal view also changed, and I started to become much more concerned about and much more protective of this industry. I have always believed Islamic economic principles and their application in the commercial world offer a credible alternative, not necessarily a replacement, but a credible alternative to conventional finance, provided that they are properly deployed. Now, I'm sure that many of you will be aware that even before the GFC started, perhaps for as many as 10 years, this industry has been debating whether or not it's doing the right thing. Many of you will be familiar with the Sharia-based versus the Sharia-compliant debate. Notwithstanding that debate, the Islamic finance industry has stubbornly, perhaps, failed to transform itself from a predominantly debt-based system into a predominantly profit and loss sharing system. And the reasons for this are complex. Today's event seeks to address one of several factors that I think are relevant, and they include the following. First, I think there is a lack of a clear strategy aligned to Maqasid al-Sharia goals set out by the shareholders and embedded in the constitution of many Islamic financial institutions or firms seeking to offer Sharia-compliant products. Secondly, the lack of moral purpose at an institutional level where the management sets the tone and enforces the right behaviour throughout the firm. Thirdly, there are a lack of obligors who are willing to fund their commercial enterprise on a profit and loss sharing basis. But this means that asset creation is very difficult for Islamic firms. Where does the fault lie for that? Perhaps we will discuss that today. And then fourthly, there is an unwillingness on the part of depositors to place their funds at risk on genuine Mudaraba principles. There's a nervousness about doing that. And that is combined with a regulatory desire to provide safety nets in the form of financial compensation schemes, whether explicitly or implicitly, and also to recognise Islamic investment accounts as deposits. Now, I think that the first two items I've just mentioned fall within the sphere of today's debate. The third and fourth items, we'll leave those for another day. There's a view that the Islamic financial industry was broadly designed to provide a Sharia-compliant alternative to certain forms of conventional financial intermediation, and that the industry's founding fathers never intended to create an Islamic economic system. Now, I'm afraid, do not have enough knowledge and have not had the privilege of discussing that with the individuals concerned to know whether that is true, but it's a view. Now, regardless of that viewpoint, what is clear to me is that many participants and many commentators are expressing concerns that Islamic finance, as presently conducted, is not doing what it ought to do in its present form. We know that in many countries, Muslim and non-Muslim, penetration levels for Islamic financial products is low and scepticism prevails. Now, in the past 24 months, and Raheem sort of referred to this when he introduced me, I've written about the first two items I've mentioned, strategy realignment by shareholders and embedding a moral and ethical purpose. In 2010, I wrote a piece called Law, Ethics and Islam, which first appeared in the Global Islamic Finance Review, which I'm sure many of you will be familiar. There's a chapter there. And I think we also had a closed-door debate on a very similar theme in February 2010. Earlier this year, I participated in the Harvard Islamic Finance Forum and delivered a paper entitled The Role of Islamic Finance in Development, which was debated in March, and I think the paper will be published later on. But these two papers explored themes that I think are pertinent today, written very much from a legal viewpoint. So I'd like to draw a few ideas from those papers, and you can perhaps think about them in the context of a proposition I'll make at the end of this paper in a few minutes. Now, as I said, I start from the belief that there is a value proposition embedded in the Islamic view of economic behaviour and financial intermediation. This provides us with an ethical platform by reference to which financial and commercial activities should be entered into. Now, the first article discussed what we actually mean when we talk about ethics, and this is why I want to put a slide up. So let's hope this works. Here we go. I tried to explore what we mean when we talk about ethics and the boundaries of ethical behaviour. And in doing that, I came across the work of a gentleman called Roger Steer, who is an ethicist, and Iqbal's nodding, so some of you will know this gentleman. He really is illuminating, and his book, called Ethicability, is about 140 pages. It's a great read, and I thoroughly recommend it to all of you. But he talks about principled conscience, which he describes as helping us decide what is right by reference to principles such as fairness, courage and kindness. He talks about social conscience, which helps us decide what is right by considering the consequences, both good and bad, of our actions on others. And then he talks about rule compliance, which tells us what's right. Now, I've also looked, in the course of this, thinking about this quite deeply, at the work of both AOFI and the IFSB. Now, against a contemporary backdrop of growing disenchantment with the banking and financial community, I constantly find myself asking whether the Islamic financial community is doing enough to differentiate itself from the conventional financial community. Now, there's a marketing aspect to that, which we won't discuss here, but AOFI and IFSB have both undertaken initiatives to develop the ethical foundation of the industry. In the case of AOFI, their work was undertaken well before the GFC occurred, and I believe that the conclusions these two organisations reached are instructive, and they would help inform today's discussion. So June 98, AOFI published its Code of Ethics for Accountants and Auditors of IFIs, and in January 03, it published its Code of Ethics for the employees of Islamic financial institutions. Now, these codes are by no means perfect, sorry Carol, wherever you are, in my view, but what I think is interesting is this. On the one hand, AOFI talk about the Sharia rules and principles having a self-obligating force. Now, implicit within this is the notion that the individual is compelled to act in the appropriate manner. But on the other hand, AOFI recognise the fallibility of man, and paragraph 7 of the Employee Code advises IFIs to enforce the code by disciplinary actions laid down by the relevant bodies. Now, that's where it all goes a bit squidgy, because it's not clear what the relevant bodies are. So that seems to introduce Steer's notion of rule compliance. We almost move from principled conscience into rule compliance. The IFSB has also published documents that seek to address ethical behaviour and ethical governance. And to name a few, IFSB 3. Now, you've got to bear with me on this. Guiding principles on corporate governance for institutions offering only Islamic financial services, open brackets, excluding Islamic insurance, takaful, and Islamic mutual funds, close brackets. Now, that was in 2006. IFSBs like long titles. They seem to think the titles make the document that follows clear. But I'm just playing around a bit there. IFSB 6 in 2008, and then IFSB 8 in 2009, went on to deal with collective investment schemes and takaful operations. So the stuff that had been excluded from IFSB 3 was dealt with later on, so that's all good stuff. And then in 2009, IFSB 9 offers us a set of guiding principles on the conduct of business, and IFSB 10 guiding principles on a Sharia governance system for institutions offering Islamic financial services. Now, it's all good stuff, but from a lawyer's perspective, perhaps the most interesting remark is buried in footnote 8 on page 2 of IFSB 10, which acknowledges that whilst a Sharia pronouncement is intended to have full effect and bind the IIFS, this may actually be contingent on national laws. The reality that the IFSB has recognised, albeit only in a footnote, is that the legal effectiveness of fatwa is best secured by embedding the rulings into the documentation being used to facilitate the Islamic financial transaction. It's the creation of legally valid, binding and enforceable obligations in contracts, and we've heard about contracts earlier from Alberto, that gives the fatwa real-world credibility. The Quran is Allah's, peace be upon him, way of guiding fallible man how to live his life. But even the regulators of Islamic finance know that punishment in the hereafter is not necessarily a sufficient inducement to do the right thing. And this, I believe, is what today's debate is all about. A desired output of this workshop is to reach some sort of consensus on the form of a proposed moral code of conduct in Islamic finance. The fact that we're holding this event and here today implies that the embedded ethical purpose of Islam is perhaps not sufficient, and that individuals working in the Islamic financial services sector perhaps require clearer guidance regarding the way they're expected to behave. Now, at the risk of giving away my position on this prematurely, in 2010 I wrote the following. I said that the senior management of IFIs were obliged to inculcate the moral realignment of the firm and demonstrate its observance by their own behaviour. I also said that the first step management could take in many cases would be to draft and publish a code of ethics for their firm. And amongst the concerns I suggested such a code should address were things like avoiding conflicts of interest, avoiding insider dealing, ensuring that people were treated with respect, and then general notions of responsible behaviour in the community. In my Harvard paper earlier this year, I actually went further than this and explored what Islamic finance is doing as opposed to what it ought to be doing. And I described this as a deep philosophical question for the industry, and one that we're constantly wrestling with, as being analogous to questions raised by Scottish philosopher and legal positivist David Hume in his treatise on human nature. As long ago as 1739, that people invariably slip between, on the one hand, describing that the world is a certain way, to saying, on the other hand, that we ought, therefore, to conclude on a particular course of action. And students of jurisprudence will be asked to consider the following proposition, and again, I've put it on the slide because even when I read this, I twist it around a bit. But essentially, what Hume was saying in 1739 is, what the law is determined by historical social practice resulting in rules. What the law ought to be is determined by moral considerations. So the issues we're wrestling with today have been around for some time. Islamic financiers do face a similar dilemma, but I put it in a slightly different way. And I say that the Islamic financial community is trying to work out, and this is in the context of my Harvard paper, so looking at development finance, is the Islamic financial community providing the right sort of development-based financial support and solutions to the community? So you just ask yourself that question. If you think the answer is that it's not, then ought the Islamic financial industry provide development-based financial support and solutions to the community? And if you conclude that it should, then you've got to work out how we can actually make that happen. And the Harvard paper examined in some detail whether or not there were any legal injunctions that might actually require or compel private commercial concerns to actively engage in development-related financial intermediation, or whether, alternatively, there were any legal impediments that might actually prevent or hinder the ability of such firms to participate in such activity. Now, there's interesting law on all of this, but I reached a conclusion that as a matter of English law, there was no reason why the founding shareholders of an Islamic financial institution should not embed within the constitution of the company purposes that define shareholder value by reference to criteria that might, but for the embedded instruction, expose the directors to claims that they were not acting in the best interests of the company. Because that's the starting point in English law. Directors have to act in the best interests of the company. So even if these directors engage in activity that has a social purpose and was less financially remunerative, and this is the crux, than other courses of action, they can do that. Now, a clear conclusion I'm heading towards is that Islamic finance will not be able to adequately address its ethical and moral goals unless and until one or more of several courses of action start to happen. And I would say they are these. First, the shareholders have to better articulate the purpose of the company and empower the directors to act for that purpose. Secondly, the board of directors need to embed the ethical, CSR, and the moral expectations of the firm in its day-to-day behaviour, and they daily need to demonstrate that behaviour themselves. And then thirdly, the Sharia supervisory boards need to be stronger upholders of these ethical parameters. Now, if these three factors can be successfully implemented, we will be able to self-regulate our industry. And my concern is that if this self-regulatory approach fails to achieve the desired outcomes, then at some point in the future, legislative bodies, policy makers, financial regulators and other relevant bodies may seek to adopt a much more rigorous rule compliance approach by setting out their expectations of what Islamic financial institutions should be doing. And I admit, I doubt the ability of politicians, regulators and others to undertake such activity in a coherent and consistent basis. If they get it wrong, that really does jeopardise our industry. So, just to conclude, I do believe that this industry that we are all so committed to could and should impose self-regulating standards. I think these would be positively received by the public. I believe that Islamic finance has to maintain its difference from conventional finance, and a large part of its USP is this ethical driver. Stating this clearly and then living up to the standard would be a powerful message at a time when, we've heard it already today, public do not believe bankers, open brackets, of any persuasion, close brackets, have their interests at heart. Thank you very much.